Thank you so much, Sally, and from the heart, thank you all for joining us in this wonderful session. I have to apologize. We're going to do a presentation that's different this time. I wanted to apologize because probably like you, I have a lot of questions in my mind that I do not have answers for. Secondly, when I do not have answers to questions, I tend to be very simplistic in my approach, so I apologize for what I'm going to tell you is probably very simple. And third, as I see challenges and questions that remain unanswered, I tend to go back to basics like you and realize that the world is not made up of machineries or buildings, but made up of people. And people have emotions. And as you understand emotions, you understand what happens with the markets. And as you understand what happens with the markets, then that leads you into three key questions that I had for you today, on the back of which I would like to organize our conversation, if that's okay. The first one was, Alberto, how do you feel about the world? I don't feel good. But within this environment, there will be winners and there will be losers, and we'll come back to that. How do foreign investors feel about doing business in Saudi Arabia? They feel very good. Some of you are in the room, and we talk to you most of the time, and for a whole host of good reasons, they feel very good. Are you concerned about anything regarding Saudi Arabia? I am, but I'll come back to that at the end. You said emotions. What do you mean by that? As we studied markets, partners, the three typical stages of emotions are being in denial. The second one is once you cross deniability, you get into panic mode. And then you get into hope. So what are you trying to tell us? Our assessment, we could be wrong. We're at the hope stage in the US, we're at the panic stage in Europe, and there's the beginnings of deniability in Asia, therefore you have to be concerned. You said about winners and losers, yes, quite simplistically, as a corporation like you, as a country like you, winners are those that have a clearly defined source of cash. And winners like you are those that have a clearly defined use of that cash. Saudi is a winner, if we do it right, if we do it prudently. There are many others who could not have the same claim. As a corporation, we generate cash internally. We generate cash from borrowing money from banks or from the markets or from selling assets. And then we use that cash for our capital expenditures, to repay debt, to pay dividends, and to buy back shares. Sometimes you have more sources than uses. You're a winner. Sometimes it's a match, you're challenged, and sometimes you have more uses than sources. Let's talk. Saudi is a winner, but let's make sure we do it prudently. Your second question, Alberto, dealt with the feelings of people doing business in Saudi. We read surveys, but more importantly, we talk, we discuss, we touch, we feel. And out of 181 countries that we talk to people about, Saudi ranks among the top 10%. It's a great achievement. We've come a long way. And you know why? Because there's mutual trust. There's an ease of doing business. We're number one in terms of MENA as far as registering property rights. If you look at corporate tax, very important consideration, at 20%, where Russia is, lower than China, India, or Brazil, very important. And as far as ease of translating local currency into foreign exchange and repatriating that, we also do it right. That leads us into the third question. So if we could be a winner and you feel so good, you said you were a little concerned about. You know that as a bank, we've been stress tested quite a few times, and if I come across as I'm overly stressed, I apologize again. I'm not, but we have been stress tested, therefore I need to stress the numbers. And back to what we said at the beginning, if the US is still in hope, Europe is panicking, and Asia is in denial, there is a likelihood that oil prices will not stay where they are. Hopefully they do, and more hopefully they go up. That's not my mission. My mission is to be more prudent and to tell, what if oil prices do go down? What happens? My mission is to help, just like we're trying to diversify the economy away from oil into non-oil. Partners, let's make sure we diversify our funding sources. And on debt, let's not rely so much on bank financing, but on bonds. On equity, let's make sure we diversify our stock exchange. And equally, for these so-called knowledge-based sectors that are so wonderful in life science and healthcare, let's make sure we all unite our efforts and create a venture capital fund that could further propel entrepreneurship growth. on the bond side. It's okay to have excess liquidity in the bank market, and if I'm a treasurer or the CFO, it's perfectly okay to try to optimize price and tenure. I get cheaper money in the bank market. I need a loan document. I don't need a prospectus, so why bother? You know why we need to bother? Because the relationship we have between loans and bonds is just too large. And in any other mature market, that relationship there is between the stock market and the bond market is 3-to-1 in favor to the bonds. We have 10 billion of bond inventory in Saudi via Sukuk bonds, a large portion of it consolidated between 3 or 4 entities. We can go deeper. Much of that liquidity in the banking sector can be invested in mutual funds, pension funds, insurance companies, on the back of which we can extend this 3-year maturity into 5 or 10 to facilitate the financing of all these wonderful projects that we talk about and that are so meaningful. What's the size of those projects, Alberto? I think we keep talking about 500 billion for the next few years. And you said you were very simplistic. I am. Conservatively, probably $1 of debt for $1 of equity is what we should be thinking about in the worst case. So that means 250 billion of debt and 250 billion of equity. That leads us into point number 2. On the equity side, where is it going to come from? It's going to come from us as sponsors. It's going to come from our joint venture partners. But equally, a piece of that should come from the stock market. We would diversify the stock market into something that's extremely vibrant and exciting, away from financial institutions or natural resources, which today account for 70%. We can have metals and mining, we can have healthcare, and we can have many more things. What portion of the equity do you think can go into the stock market? Let's be simple, just 10%. That's 25 billion over 10 years. It's not a lot. It will go deeper, and please allow foreign investors to come in as opposed to just via share swaps, but more meaningfully. And that leads us into the third and final point. There are many entrepreneurs in your wonderful country that do need capital. They need seed capital. And for those of us to just evaluate the emotions of investors, we love to look at the history of markets. If we were having this discussion 50 years ago, partners, there were many entrepreneurs in this fabulous country that today is our host that had great ideas but didn't have access to capital. And they couldn't come to the major leagues because they were not accepted, they were too small. Hence, NASDAQ was created. Couldn't we, if we join efforts, because we all put seed money into venture capital in Saudi for these so-called knowledge-based projects, couldn't we just bring them together and create a parallel market that's available to the people who have great ideas, have the entrepreneurial spirit, and could certainly help us win? Back to the beginning, I apologize for having more questions than answers. I apologize for being so simple. But in challenging times like today, partners, let's not forget, it is about people. And I thank you very much.